Today, we will dive into Fed meeting expectations and market momentum. Hello, everyone. This is Shilpa Raidas, and we have Jay Vora with us. Welcome, everyone, to Midweek with Indiacharts. How are you, Jay?
I'm fine. How are you?
I'm doing very good. Thank you so much. Jay, I would quickly like to begin with asking you, can you highlight the important data points we got last week? And today, we also have the Fed meet. What are you expecting from it?
Right. So last week, the most important data was non-farm payrolls, and that showed that there is still, a job addition that is happening at a healthy pace. And, so on the job side, the things look a bit as if, the economy is doing very well. But when we see many of the other parameters like the housing data, that seems to be cooling off. uh, I think last week or last to last week we had the factory orders, that had slowed down a bit. In fact, that was in negative. So there are some parts of the market that is not doing that great. I mean, there seems to be a slowdown, but in the jobs market, nevertheless, it is strong. The only good part is that the average earnings per hour, that is not like, blasting away. So that is relatively a good part. But again, over there, the numbers are still a little bit on the higher side, and which will make Fed a little uncomfortable. Then if we see the unemployment data, that had come down from 3.9 to 3.7. So, those are things that the Fed may not necessarily like it. But the other part to it is that when we look at the CPI data, that once again came at 4 and 3.1. I mean, core and the CPI data respectively. But now, what is happening is that we have seen that cool off in CPI from 9 to say 4 levels. But now, I mean, it is getting very difficult to get below that, right? So here, what is happening is that the street is anticipating that because we got the CPI to 3 sort of levels and core to 4 sort of levels, so there is a chance that there can be a rate cut coming very soon, right? But what I feel honestly is that there is a big disconnect over here. That is because Fed had repeatedly said that it wants to see that inflation target at 2%, right? And यहाँ पे last 3-4 months से we are seeing stagnating CPI over there. Okay, I mean, we are not seeing a fall, but at the same time we are not seeing a rise as well. So वो stagnant हो गया है. Now the thing is that if they want to achieve towards that 2% mark, then they will have to keep rates higher for longer. And honestly, I don't think market is prepared for that. It is actually preparing for a cut. And last time also we had discussed that if at all we go by the history, then whenever the Fed has cut the rates, it has actually resulted in the market cooling off or going down. That is because when the rate cut happens, it means that things are slowing down considerably, and then it takes 4, 5, or even 6 rate cuts for them to stimulate the economy. So market is trying to build in a Goldilocks scenario wherein the job data continues to see healthy amount of addition, but that doesn't really impact the inflation part. And the other part is that the CPI inflation and the core CPI inflation, they be in control, and in fact they cool off further. And at the same time, the Fed also goes ahead and cut the rates. So I don't think that is how it is going to play out. So if you look at the two scenario, what can happen is that either if all is good, then the Fed is likely to keep rates higher for longer. And if that happens, then that will negatively surprise the market, because right now the market is not anticipating that, right? And if the rate cut actually happens, that might be due to something breaking, or the economy seeing a significant slowdown. So both the scenarios are actually not very good for the markets. But as of now, there is a big disconnect, and I'll also show you the chart why I'm seeing those disconnect. But that's on the data and the way how things are playing out in the US economy. in the Indian economy, of course, the CPI data came below the expectation. And like I said earlier as well, our Indian thing is very much in control. And, there are no major concerns over there. Right now, the major risk is basically from the US indices, where, it is like a much awaited recession, which is so far not coming. And,
Right.
but the data point, shows that we are going towards that slowdown wala path, or, worst case is that something breaks and we see a recession. So that is on the first part. Now the second part is like what to expect from the Fed. So I'm expecting that there will be no rate hike, and I think Fed will say that more or less they are done now. But he will say that we will likely to keep the rates higher for longer, and we'll keep it till the time we see that the inflation is cooling off significantly and it is behaving the way we would want it to behave. Because right now, like I said, CPI, core CPI at 4 is still very high, and it is not, in that comfort zone basically of the Fed. So yes, so that's how I think this event should play out today, and I am not sure how the market will react, because any, be it a good news or a bad news, market is taking it positively and inching higher. And like we had discussed last time, there are many technical factors to it as well. So we'll come that in the next part.
Okay, that brings us a lot of clarity. Thank you so much for that, Jay. I would also like to, excuse me, ask you, Ness, that the equity market continued its bullish momentum this week, yeah? And are we seeing any kind of exhaustion, or will the equity market continue to do well in the near term, Jay? Also, please tell us your view on the dollar index, gold, and silver.
Yeah, sure. So I'll quickly share my screen. So firstly, we'll check the dollar index. So as we had discussed last week, the dollar index has retraced 61.8% of the rise, and so far, it is holding this mark. Okay. So as long as this low doesn't break, there is a chance that the dollar index does rise higher. But yes, in the near term, there will be a sort of a resistance that it may face somewhere around 104.38 to 104.50 sort of levels. So that's where we need to see what the dollar index do. But yes, in the near term, until this low doesn't break, there is a scope that the dollar index actually sees some sort of a pullback, or it continues to rise higher and maybe even go back to these levels. Now, what it would indicate from a medium term perspective is that it is possibly sort of forming some sort of triangle over here. Okay, so in which case what happens is that this will end up becoming a running triangle, and the decline would be at this point, which will be A. Then within the triangular pattern, this becomes A, B, C, D, E. Something of that sort can happen. So that is one of the things that we are watching closely. But yes, the broader point being that as long as the load doesn't break, there is a positive momentum you can expect in the dollar index, with obviously zigzagging kind of move in the days to come. Now, if you see gold and silver, that has been an absolute disappointment, because I thought that this time around that they will break this resistance mark very decisively and it will continue to rise higher, but that has not happened. And instead, the gold is on the verge of breaking the 40-day exponential average, and that may not be a good sign, because if it was in a strong uptrend, then ideally this averages wouldn't have broken. Like, it would have taken support at the averages and it would have continued to rise higher. If you see silver, it is even more weak, because what happened was that it saw a breakout from this trend line over here. It couldn't sustain, and this time it has given up very sharply. So broadly, the thing is that now for gold and silver, again, it needs to reclaim this high, especially, I mean, in the near term, that 2080 sort of level on the upside. It needs to reclaim that mark and it needs to sustain above it. If it doesn't, then it is basically in a sideways sort of trend. But the trend is, the range is pretty large, because 20,080 on the upside, and over here we saw a low of 18,020. But otherwise, this is the sort of range that is there in the gold, and we are right now at the upper end of the range. So this, typically false breakouts are not very good signs. Now the only hope for the bulls will be that the gold actually respect this weekly averages. If that also doesn't happen, then gold can be in trouble. But yes, in the near term, it is looking weak. So gold and silver, both are looking weak. In fact, silver has broken the weekly averages as well. So it doesn't bode well, with the bullish narrative, at least at this point of time. Now, when we look at the S&P index over here, like we had said, that at this low, the vol PCR was very high, which means that people were buying puts like crazy, and that means that market usually tends to behave, contrary to how people are positioned. At this point of time, people were very much bearish on the market, and now those bearish readings have corrected, but there is still some more legs on the upside. So basically, the first sign of weakness would actually be once we get a negative weekly close or so, because we have seen, I think, 5 or 6 consecutive positive weekly close. Now, if at all it sees a negative weekly close, that will be the first starting point to think that something is reversing. Okay. Until then, the bullish momentum that is there in the market, that may likely to continue. And like I was telling you that, there seems to be some disconnect in the market. So the disconnect is that, see, if crude oil goes down, okay, it tells you that the world market is possibly not doing well. Okay, because if the demand is very high, if the mood is very gung-ho, then usually crude will inch higher, right? But over here, crude is collapsing. Even if you see copper, it has literally done nothing after peaking in 2020, and over here also, so far we are not seeing any signs of impulse move. So the point becomes that if the market is so, if the economy is doing so well, then why are these important commodities not performing the way they should be? Because if, like I said, if crude is, if the markets are rising higher and the economy is doing very well, ideally crude, copper and all will do well. Okay, but over here we are not seeing those things, especially for the US index. Okay, that's where they have a very good correlation. For Indian markets, okay, sometimes, for Indian market, it largely depends on the narrative, how people want to put out. But in US, we have observed that close correlation between crude, copper, and the main indices. So this is the first disconnect, that we are actually seeing. And then the other thing is that the dollar index has not really broken the support levels. Okay. So if the dollar index does rise higher, then it may eventually, pose a risk on the equity markets, which are right now on fire, and it is ignoring all the news, all possible news in the market, and it is just rallying higher. So we need to watch very carefully over there what happens. But yes, so far, honestly, there is no signs of a breakdown yet. So we might be thinking ke kabhi to top hoga, but so far that top is not here at this point of time. Now when we look at the Nifty index, sorry, so interesting thing happened today. So one was that when we look at the hourly charts, this 20,850 mark, that was acting as a very strong support for the Nifty index. Okay, that broke the 40-hour exponential average broke. Just to put things in context, that whenever the markets are trending, usually this blue line will not break. Okay, and the markets will continue to rise higher by taking support at the 40-hour. So it did break over here, but eventually it reclaimed. Now the interesting part was that when we see the Bank Nifty index, it did not break this blue line. If we see the mid cap index, that did not break this blue line. If we see the small cap index, that did not break the blue line. Okay, so basically, we were waiting to see if the other three indices also confirm. So they did not confirm today, right? So now the thing is that we will be seeing very closely. Firstly, whether the 40-hour exponential breaks on the downside or no. Second thing, whether it sustains below it or no. And the third thing, and the most important thing, where we can possibly say that the rise is very much done and we can think of a correction, is when we see a negative weekly close. Okay, not daily, negative weekly close. Because a negative weekly close will kind of mean that will kind of then confirm this divergence, because if supposingly the RSI does not hit this high and we get a negative weekly close, which cools off the RSI, then we'll have a negative divergence into play. So then what will happen is that as long as the high of that negative weekly bar does not break, there will be a case of a correction due to the high weekly RSI readings which we are seeing. So it is not just on weekly, but daily, weekly, monthly, all the time frame, RSI on the mid cap and the small cap is in an overbought zone. And this is something that is not, seen very often. But yes, we are kind of in that phase. So we have to be careful. So frankly, the momentum is on the upside right now, but you have to watch for those triggers very closely. Okay, because I feel that once the reversal happens, it can create a lot of damage. The reason being that a bigger 5-wave rise at some point will complete. And when a bigger 5-wave rise completes, so, you will see the rise, you will see the retracement of the entire rise. So, it could take multi-weeks or even multi-month as well to unfold. So that's where people need to be a little cautious and they have to strictly trail. Okay. If you want to ride out the momentum, you have to strictly trail, or else, you keep booking profits as and when you see them. So yes, so this is on the Indian indices. So broadly, we are still not seeing any confirmation of a breakdown. But when we look at the sentiment data, in the next part, that's where it would be important to put into context where the Indian markets are, okay, and how it could probably perform in the days and the weeks to come.
Okay, wonderful. So Jay, let's get on to the sentiment data you just mentioned. Please tell us your important observations that is there in the sentiment data on strike, Jay.
So yes, so first thing is that when we look at the average swing, that is basically the smoothened version of the daily swing. So that you can know, that you can clearly see that there is a divergence, right? This indicator is making lower highs, but the Nifty index is continuing to rally. So that is telling us that, fewer stocks are actually seeing an uptick in, fewer stocks are seeing rising RMI basically. Okay. The RMI is actually declining, which means the momentum is actually declining. So that is first sign of caution that we need to, this is one of the red flag which I can see right now. The other thing is that if we see the FII's positioning, okay, that has now from minus 175 contracts, it has now turned to plus 50,000 contracts. And, this is something that we were telling earlier as well, that, this may happen, that all these shorts are going to get cut and, there will be a short squeeze and that can result into a rally. And that has actually played out now. Okay. Now, in the past, if you see, so there are many instances that around this first line, the Nifty index has stopped. Okay, around these areas, you can see. So we are sort of, coming to that area. So that is one point where we need to be careful. And actually, the client's index positioning is a lot more interesting. That is because, that has come to this second line, which is the second overbought, second oversold zone, which means that now clients are short by, I think, somewhere around 40,000 contracts or so. Wait. Yeah, so they are short by around 40,000 contracts. And typically, we have seen in the past, especially after 2020, that whenever this number reaches to minus 45, okay, that is the point when actually the market peaks. So let me share with you. See over here, you can see this was the high. Okay, wait, let me take a parallel line. So, sorry. So you can see at this point, right? Over here, it started moving higher from here. Basically, unka net short was very high. So then, once they started cutting their position. So the thing is that, client and FIs work inversely. Client usually try to, short when the market is rising, and then they cover when the market is falling down, and the FIs actually play with the momentum. When the market is rising, they go long, and when the market is falling, they short. So you can see over here, there has been a reversal. Over here also, once it reached, there was a some bit of correction. You see at this point, see, so over here, the opposite is that when the positioning is very high, which means that the clients are very much long. So that's where, it ends up making a bottom. So that is how this works. And now at this point of time, the client's positioning is on the oversold zone. That is basically means that the market could be topping out, anytime soon. So this is another parameter. Now, one more thing which we had discussed, in our few interaction is that the put call open interest 9 MA. So what it means is that if the ratio is rising, that means people are more confident shorting puts, and shorting puts is equal to bullish sentiment, right? When this ratio is going down, which means that people are more comfortable now shorting call options, right? And shorting call option means that the market, it is not good for the market, and it means that the market can correct. So what had happened was that it was in this oversold zone. From there, it has bounced back. And now, post 2022, if we see, so once it comes around this 1.5 to 1.05 to 1.07 mark, that's where it starts getting a bit overbought for the Nifty index. And typically we have seen correction in the coming days, right? So right now, if we see this ratio, this indicator, so it made a high of around 1.05, and now it is turning down. Okay, so this is again one factor, which is a little discomforting, and we need to see. Now, like I had mentioned in our previous interaction as well, these are all indicators which will tell you that the market is losing momentum, right? And these are basically the red flags. But the important part is that we have to see the reversal happening on the index itself. Until that doesn't happen, there is a chance that these indicators may end up forming a divergence. And only when the Nifty corrects or the main index correct, that's where, these indicators will then start. Just to highlight once again, these indicators are sort of throwing you that red flag. Okay. But Nifty right now is in a momentum, and nobody can deny that. So once we start seeing a reversal in the Nifty index, that's where we'll have to be very careful this time around, and a possibility of a much deeper correction is possible rather than a day or two sort of correction. Okay. Now, one more indicator which I was watching yesterday. So it is the advanced decline ratio. Okay. And that is smoothened with the 20-day average. Over here also, what has happened is that I was expecting that, it may even go towards this second sort of line over here, but actually it couldn't really sustain at higher levels. And now what we are seeing is divergence. So you can see that this the AD ratio is falling down, but the Nifty index is rising higher. And that is telling you that the Nifty index is rising higher, but on a low breath. Okay, the breath is sort of weakening. So that is again a red signal over there. A red flag over there. So yes, so there are few things that are a bit concerning, okay, and which are pointing out towards market probably cooling off in the days to come. But again, we need some price action to confirm, and especially for the Nifty index, I think this low would actually now become a very important pivot point. If the low breaks and the Nifty sustains below that low, then will be a point of bother. And then, maybe we can expect a correction up to the averages, or maybe you can expect the gap to be filled. And then what the Nifty index does over there will be important. But yes, we are, heading into the Fed event. Hopefully, we should get some clear trend. As of now, though, the trend is up, but like we saw in the sentiment indicators, there are many of them, that are throwing caution sign. And once the Nifty index basically confirms on the price action front, that's where probably these indicators will then become a lot more relevant. And not to forget that actually the RMI went in sell today, right? So again, there are few factors which are concerning. So let's see how things unfold, and let's see if we get a big move after the Fed meet today.
Okay, that's wonderful. Thank you so much, Jay. Like always, you have provided clarity and comprehension with your valuable insights, and I'm sure viewers are going to get a lot of insights and knowledge out of it. I'm sure you guys must be keen on trying Strike. If you haven't, then I'm going to leave a link down below in the description. You get a free sign up right now, so go and check out Strike, and also follow Strike on Twitter, because that is where we put on our daily updates, okay, and all the stock market updates that we derive from the platform Strike itself. While you're at, please subscribe to the YouTube channel of Indiacharts and click on the bell notification. That is where you are going to get notified, especially when we have our midweek next week with Jay. Thank you so much, Jay. That was a wonderful session. Take care.
Thank you.
Thank you.